Okay, any doubt or any clarification needed from the last class? The previous class, anything need to be clarified? Yes, nothing is there like that? What did we discuss in the last class? HR. HR.
No accounting.
Oh. We don't worry about other state. We worry about our state, okay? Can you do me a small favor? Go to office. Yeah. Okay, what we discussed in the last accounting for managers class. Objectives of accounts. What is the objective of accounting? To know. If you bring that beginning, it is right. To know the financial position, to know the financial performance. Good. Okay, how do we know the financial performance of a business? By preparing profit and loss. By preparing profit and loss account. How do we know the financial position of the company? By preparing the balance sheet. Same thing. What is that last morning? That one. Okay. So the two are the objectives of financial accounting. What else we studied? Type of companies. Okay, that's all basics in accounting. Yeah. Records. Okay. We studied about what is a transaction. Yes. What is a transaction? What we refer activity related to money. Okay. Any activity that is involving transfer of money or monies. What? Okay, that is transaction. All right, then event and transaction both are same. Business event or business transaction both are same. Okay. Accounting cycle. Yeah. What is accounting cycle? It starts from identifying the business transactions, then recording of business transactions. After that, summarizing, classifying, summarizing takes place. Then preparation of trial balance. After that, preparation of financial statement. All right. So that's accounting cycle. In between, if there is any error, you have to rectify that. Rectification of error. One small chart I showed you. Right? Okay. What else we studied? Okay. In terms of recording, it is taking place either in subsidiary book or in journal. What is subsidiary book? What is subsidiary book? Subsidiary book is a book which records the specific transaction, grouping into one particular category. Grouping into a particular category. Okay, what other subsidiary books are there? Purchase book, sales book, purchase return book, sales return book, cash book, bills receivable book, bills payable book, and journal proper. Okay, so these are things various things we studied in the previous class. Any doubt? I have given you small appeal. I mean, I appealed for something. What is that? I told you some work, no? NCRT, 11th standard textbook. I told you to refer, to go through, or just to see. Have you seen any other doubt in that? Have you read? Have you gone through? Yes. Do you have any difficulty in that? Sir, this is the thing I want to understand. Okay. No doubt is there? Any terminologies? Okay, fine. So with this background, we can just step into the next level. That is, I'll ask him. This is who has come now, no? Cynthia is the person to ask all these things. You also ask, let me also check it. Fine. So next stage, you will try to record the business transactions. We have some fair idea about the basic framework of accounting. All right. Okay. So we start recording the business transactions today in the journal. We are going to prepare journal entries. Today's class, first part, we are going to prepare the journal entries. Okay. These materials are already there in your LMS. You can read. Okay, I think the same thing. It is not exactly the NCERT book. It is a chartered accountant course is there. CA. From their website, I have taken Institute of Chartered Accountant of India. This we already studied. Recording, the theory we studied. We did not study about how to record, but we studied about the procedure of accounting. Okay. We have to identify the business transactions, and we have to record the business transactions in order to classify them, summarizing them. After summarizing, we need to analyze the business financial data. Okay. That analysis will lead to interpretation. What is analysis? We have some tools. We'll study that a little later. One of the best tool, one of the famous tools available for analyzing the financial data is ratio analysis. Ratio. By using ratio analysis, we just analyze the financial data. Okay. Of course, there are so many other tools available. We study about ratio analysis, the last chapter. After that, we have to interpret. Then we have to communicate all these data and information to the people. Who are the people who need accounting information? These people. Who are they? Management, owner. If it is a partnership firm, partner. If it is a company, shareholder. Okay. Then the board of directors or the management, managers, and other officials of the company, officials of the business organization. They need accounting information. Yes, sir. Yeah. Which one? No, applicable. Everybody. Customers, it's not customer will come and check your records every day. The output. Okay, somehow they are interested in your in your financial information. Why? If you have a lot of profit, meaning inside hidden meaning is if a business is having a lot of profit, 100% profit is there. Meaning, if you buy for 1 rupee, you are selling for 2 rupee. So that is little concerned about customer. They think that they are exploited. So for that reason, they need that information. Will you give it or not? That is up to you. If it is a public limited company, of course, it's available in public domain. If it is a private limited company or a sole trading organization or a partnership, of course, it is not available in the public domain. As you say, it is not available. Okay. But they are concerned about your information. They need your information. Okay. So these are the people who need accounting information. One of the important questions for the exam. Okay. Users of accounting information. What is accounting information? From the balance sheet, from the profit and loss account, what and all I can derive. Okay, after analysis or without analysis, okay, processing or without processing, what I derive, what I have is called accounting information. What is the sales of this company for 2021-22 financial year? That's one accounting information. Okay, the raw information. If you process it, you can connect that profit with the sales. 20% of my sales is becoming sales. That means 100%, 100 rupee. If my sale is there, 20 rupees is my profit. That connection, making it analysis. With analysis or without analysis, you need some information that is being given to these people. Investors, it may be a shareholder or it may be a debenture holder. Okay. Preference shareholder, and then lender, bank, or any people who have given money to you, supplier of goods and services to your organization, government agencies, tax department, okay, any other enforcement department, they also need your information because you enforce certain things. Tax, of course, to collect tax. If you are hiding anything, then enforcement department, IT right, something will be there. That time you have to produce the information. Then customers, just we discussed, the customer of the company, even employees. Employees not mentioned here. Employees also one of the parties to whom accounting information is supplied or required. Okay, so these are all the accounting information users. Then there are some economic event that is happening in the business that's going to be an input for accounting information system that is being processed in this accounting cycle. We already discussed about this in the last class in another chart. Okay, recording of business transaction either in the books of journal or in the books of subsidiary. Okay, then we are posting that into ledger. Then we are preparing a trial balance. Then we are finalizing the books of accounts by preparing the profit and loss account and balance sheet. Then that becomes an output that is given to these two people. Internal users of accounting information and then external users of accounting information. Even potential investors. Investors, those are already invested their money in the business. Potential investors, suppose you and me, we have money. We are looking for some company to invest in. That time, we need accounting information of that company to know what is that company, whether we can invest or not. It's called potential investors. Okay, so these are the people who need output of the accounting information system. Okay, any doubt up to this, including this and the previous class? Okay, simply you can find out the surplus or a profit of a company by looking at this. Look at this, goods sold. Suppose I have bought goods for rupees 1 lakh. I have sold the goods for 1,47,000. Remaining 15,000 worth of goods are there. Okay, now how do I find out the profit of the company? The first two are income. That means goods sold and goods remaining to be sold for next year. Okay, so 1,62,000. Then cost of purchase 1,15,000, and you are paying rent for the shop where you are keeping your business entity. So that becomes 1,20,000. So profit becomes 42,000. Simple matching of income and expenditure. Okay, this is how we are going to prepare profit and loss account in a bigger manner. I mean, including everything. This has only two items. I am buying, selling, I am paying rent. Some of the items are left out without selling at the end of the year. That is worth rupees 5,000. 5,000, right? 5,000. Okay. This simple way of calculating profit. Okay. From this, so much discussion what we had today as well as in the previous class, we can define what is accounting. Accounting is nothing but recording. Look at this, recording, classifying, summarizing the transactions which are in at least a part of financial character. Money or money's worth should be there. If that transactions there in the business, we have to record, classify, summarize in the books of accounts. For what purpose? For the purpose of interpreting the result of the business. We can't just interpret without having the result. First we have a result, then we interpret. So this is a simple meaning of what is accounting. I read it for you again. Accounting is the art of recording, classifying, and summarizing in a significant manner and in terms of money the transactions and events which are in part at least of a financial character and interpreting the result thereof. The way of telling them, some authority has given this definition. Look at this definition given by American Institute of Certified Public Accountants. But we don't want the same way of writing. Understand and you write in your own way. Recording, classifying, summarizing. Of what? Of business transaction. Why? You have to find out the result and also to interpret the result. That's it. Clear? That's the meaning of accounting. Meaning, or you can say definition of accounting. This we already discussed. Okay, first stage is identifying the transaction, then recording the transaction, then classifying the transaction, summarizing, finding out the result, analyzing the result, interpreting the result, and then communicating such result to the stakeholders of the company, right? Okay, evolution, if you want just 1 or 2 lines, I'll tell you. Accounting, the modern way of accounting, what we follow today, has evolved in 14th century. 14th century. Okay, in Italy, there was a person called Luca Pacioli. Luca Pacioli. He was the person who propounded the present form of accounting, what we are following in the modern days. Okay, double entry bookkeeping system. That accounting is called as double entry bookkeeping system. The entire world, we follow this. Okay, that's called evolution of accounting. What you know. Okay, what you should know. Only one line. That's it. Next, objectives of accounting. Already we discussed just before the class. Two objectives that are very centric, very important objectives. To reach that two objectives, we have some ancillary objectives. Without recording the transactions, we cannot have profit and loss account, or we can have balance sheet, right? So the first objective is systematically recording the business transactions. Recording of business transactions is the first objective. Second objective is to ascertain the result of the transactions recorded, meaning to ascertain the profit or loss, to ascertain the business performance, financial performance. Third one is to ascertain the financial position of the company. We already discussed, no? Two equations we discussed. Income minus expenditure is equal to profit or loss. That is nothing but ascertainment of result of the business. Another one is another equation, that is assets are always equal to equity plus liability. Equity plus liability. That is nothing but ascertainment of financial position of the company. Next objective is providing such information to the users of accounting information to make some decisions. Providing, supplying accounting information. That's also one of the objectives of accounting. Okay, providing information to the users for making some decisions rationally. And last one, to know the solvency position of the company. To know the solvency. Solvency position can be ascertained in this third objective itself. But in detail, if you analyze that, you can find out little more insight about the solvency of the company. Okay, so these are only 5 objectives, but important objectives are only second and third. To ascertain the profit, to ascertain the financial position. Okay. Okay, bookkeeping. What is bookkeeping? Recording of business transactions. The first stage of accounting is bookkeeping, recording of subsidiary books and journal. Okay. Okay, there are some classification of accounting, subcomponents of accounting. Academically, we use this classification. In companies, of course, all are together. Simultaneously, it is happening. But in academically, we have some difference in accounting. One is financial accounting. Whatever we discussed so far is financial accounting. Okay, what is management accounting? After you prepare these 2 statements, you take the 2 statements and analyze by applying some tool. One tool I told you, ratio analysis. Apply that tool and analyze it, and you're generating some input to the management to take some informed, logical decisions. Okay, the study about that concept is called as management accounting. Okay, it involves in planning, controlling, and decision making. But in financial accounting, just recording and finding out the result. Okay. And third one, cost accounting. Cost accounting deals with the tools and techniques required for ascertaining the cost of a product or a service, and also to have a control over the cost of a product or service. We will discuss about these 2 in detail after we complete the financial accounting. Okay. Next one, there are so many new aspects are emerging in accounting also. Okay, one among them is social responsibility accounting. How you are reporting to the society, the business is socially responsible. Okay, that you are going to have in your business organization. How my business is socially responsible. We are talking about today CSR activity, right? Corporate social responsibility, green business or green, what you can say, environment friendly business. Many things we are talking about. So how our business is socially responsible. How to record that? How to record and show to the public a statement that is being studied in social responsibility accounting. Then human resource accounting, accounting for human resources. Okay, these two things are many things like this evolving day by day. Everybody is telling new concept, but we are concerned about only financial accounting, management accounting, and cost accounting. Things are only theoretical. You can just know what it is. We are not going to do anything on social responsibility accounting as well as human resource accounting. But if reporting environment demands that, we have to report that also. Suppose SEBI tomorrow, Government of India is telling, we want to know your report on social responsibility. Then we have to prepare a report and give. Only that time we have to study about this. But we as a accounting for manager student concerned about the first three. Okay, this we already discussed now. Investor, employees, leaders, suppliers and creditors, customers, government and their agencies, public and management. The chart I have shown you, the beginning. They have given some internal user and external user. Here it is given detailed information. Okay, who are all using the accounting information. In exam, if it is asked, you should not write only the name, meaning supplier and creditor, customer, government. You write the explanation as well. In what form the public is in need of your accounting information. Suppose I'm a public, I'm not an investor in your company. I may take some decision in the future to invest in your company. For that, I need some information about your company. That is what I am using your information. For that only, I'm using your information. Okay, like that, you have to give some explanation, right? Yeah, limitations of accounting. Accounting takes into consideration only the monetary transaction. It does not take into consideration any qualitative information, only quantitative information, the two related to money. My HR manager is very honest. My MD is very punctual. Let it be, but we don't worry about all those things. If he is punctual and honest, good for the company. That's all. As an accountant, I can't write it in the books of accounts. My MD is very honest. I can't write it. Okay. So accounting is having that kind of limitations. We have some information. Okay, that information gives some idea to us. But if you go with that information only with the information sake, you may be sometime misguided. Sales of 2020 in your company is the ever low sales in your company. If this is the information you are receiving from the accounting department, immediately you cannot say in that year the management is performing very poor. You can't say like that. But accounting information will lead to that kind of decision making. You should be careful. It is not considering about qualitative information. What is it? Year of 2020? What is the pandemic year? Immediately you have to check that. Is there any systematic or universal impact on the business? But accounting information will not tell about that. So what I'm trying to say is qualitative information are not captured in accounting. Only quantitative information, that too money matters are taken into consideration. Inflation is not considered in accounting. Inflation. Simple logic. You bought goods in January. You sold it on December. 12-month period you had. You bought it for 200 rupees. You sold it for 250. Accounting records 50 rupees as profit. But really speaking, it is not 50 rupees. The price of the commodity in the market might have been increased. It's not because of you added some value to the commodity and you are able to sell it for 250. So this is not taken into consideration. What is the logic given by accountant? It's only a small period of 1 year. So inflation within that 1 year, it's okay. We are not calculating any inflation adjusted profit. We are calculating just profit. So that's another limitation. For the sake of telling limitations, people are telling this is one of the limitations. Like that, there are so many limitations. You can just go through this later. It's not important for us. Yeah, you already know in India, we have this chartered accountant job. I mean, the auditors, the public accountants, what we refer in America, we call them as chartered accountant in India. Okay, certified public accountants, CPAs in India. Is ICAI, member in Institute of Chartered Accountant of India. So that profession, they are only taking care of this accounting industry in India. Okay, a member of ICAI is allowed to or authorized to certify the financial position of a company. The true and fair view of the company is revealed in the statements. They will certify. They will help us to prepare these two accounts, two statements. Okay. They will conduct the exam. ICAI will conduct exam. If you pass in that exam, you will become a chartered accountant in India. Okay. Okay, this is about the introduction aspect. We'll go to the next concept, that is preparation of journal. Okay, really we are going to prepare a journal. Once again, I'll open another document. Before that, some concepts and convention is there. We just read that also. Concepts and conventions. To prepare your financial statement, to prepare your, what you can say, this one, any profit and loss account or any balance sheet. Sorry, again, it's only opened. We need some basic rules and regulations, right? That rules and regulation is going to be given in these concepts and conventions. Those are online. Is it visible for you? The screen, second screen I'm opening.
You can see
Anybody
only
from
the
online
PDF
can
also.
respond?
We can
No,
see
sir.
the PDF file.
No. Second. If you want to prepare accounts, if you want to make journal entries or anything you want to do in accounts, we need some rules and regulations discussed now. To share this. Yeah. I think now it is visible.
Yes, sir.
Yes.
Yes, sir.
Look
Yes,
at
sir.
this. Look at this particular picture. This gives you the overall concepts and conventions of accounting. If you want something to be done, there should be some base, there should be some framework, guidelines. That guidelines of accounting is this only. This is called as concepts or principles and conventions. First concept is business entity concept. It is there in your LMS. This I have just downloaded from your LMS only. If you are given with user ID and password, you can download this. Okay, these materials are already there in your LMS. So first one is business entity concept or simply entity concept. According to this concept, accountants should treat business and owner are two different entities. Meaning, if businessman gives money to the business, it need to be recorded. Sir, it's my own business. My businessman is giving money, so I don't want to record. If you do so, you can't find out the true and fair position of the company. Okay, so business and businessmen are separate from each other. If I give money to the business, need to be recorded. If I take money from my own business, that also to be recorded. Suppose I'm having a vegetable shop. Daily, my wife is going there and taking some vegetables for the daily usage. So it is owner only. Let them take. If that is the case, I can't find out the real profit. What I found out may be misleading me. I may have a lesser profit, actually. Okay. So if it is taken, it should be recorded. That's called drawings. From my own business, if I take something, that is called drawings. In my own business, if I inject some fund, that is called capital. Investment, capital. Okay. Both need to be accounted. Okay. Business and business one and the same. They are different from each other. That is called business entity concept. Second one, money measurement concept. Only the transaction which can be measured in terms of money can be or should be recorded in books of accounts. Okay, that's called second concept. Third concept is periodicity concept. We should have some period. We should have some kind of months or year or time period from and to within which I want to judge my business. So 12-month period is the periodicity concept, 12 months period. Okay, 12 months. Every business organization will close its books of account by knowing the business profit or by knowing the business position only for 1 year, 12 months, periodicity concept. Current year period income, current year period expenditure should be compared. I can't compare the last year income with the current year expenditure to find out the profit, periodicity concept. Next one, accrual concept. Anybody knows accrual concept? Yeah, accrual concept means, yeah, current year you receive, you paid some insurance premium, but the coverage of insurance premium is for 12 months. Okay, you paid on 1st January. You are closing your books of accounts. If I say closing the books of account means finalizing the books of accounts. Okay. On 31st March, I'm closing it. So how, suppose you paid 12,000 rupees as insurance premium on 1st January 2022. You are closing your books of accounts on 31st March 2022. So how much amount insurance to be minused from the income of the current year? Only for 3 months. 3,000 should be treated as insurance premium for the current year. Because remaining 9,000 rupees, you already paid, but you're going to get the benefit in the next year. So that 9,000 is called as prepaid insurance. Okay, so it should be treated as asset for the current year. Next year, it can be treated as expenditure. This concept is called as accrual concept. Similarly, suppose you have an investment in the bank, you have a fixed deposit in a bank. It gives you interest once in 6 months. Okay, 1st January you deposited. 31st March, you did not get any interest because it's going on 30th June. Second interest on 31st December. Biannual interest. Okay. 31st March, you are closing the books of account. Should you consider your interest or not? You did not receive any interest, but you have to consider for 3 months. Suppose total interest is 12,000, means 3,000 you have to add in your income of current year to find out your profit, even though you did not receive it. So this concept is called as accrual concept. This 3,000 rupees, what you are adding in your other income or interest income into your total income is called as accrued interest. Income earned but not received. Expenditure made but benefit is not utilized. Both are called as accrual. You have to be careful about these aspects before you find out your profit. Then only it can be a true profit. Okay. Any doubt in this accrual concept? Okay. If not, next one, matching concept. Revenue and expenditure of a particular business of a particular period of time should be matched with each other to find out the profit of the business. We already discussed now equation, income minus expenditure. Okay. Next one, going concern concept. The business is expected to be going on forever. The business is not started for closing it. The business is expected to be there for ever. That is why we are having this indebtedness. I give you loan for 2 years, believing that your business is going to be there after 2 years. My business is also going to be there after 2 years. Going concern concept. Men may come, men may go, but the organization remains forever. Sir, should I not close my business? That's up to you. It's your business, you can close it. But accounting assumes the business is not opened for just closing. If it is forced, suppose it's not a good business, I want to close, you can do so. Legally, you can do so. Okay. Next, cost concept. Historical cost only to be recorded in the books of accounts. If you're buying a object, you're buying a piece of land by spending 1 crore. But real value of that building or the land is 1.5 crore. What should you record in the books of account? Is it 1 crore or 1.5 crore? 1 crore. How much you paid or how much you received? Okay, historical cost need to be recorded in the books of account. That's one of the principles. Next one, realization. Unless otherwise you realize something, you should not write it in the books of accounts. Sir, my friend told he will come and buy goods from me tomorrow. Okay, let tomorrow comes. Let your friend also comes. Later on, if he buys, you write it in the books of accounts. Not in the assumption that he is going to buy. Today only I raise a transaction. I raise a bill. No. Okay. Realization concept. Dual aspect. Very, 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 very important aspect of accounting. Dual aspect concept. Meaning, each and every transaction has two effect into it. Can anyone tell me a transaction? Sorry, sir. Credit and debit is a transaction. What is a transaction? We have discussed so many things. You are telling now like this. Huh? Sorry. What is transaction actually? Any activity that involves money or money's worth transfer of money or money's worth. Any one example for a transaction? Purchase of goods by paying money or not paying money? By cash. Purchase of goods for cash. Is telling for cash. How much, sir? 1 lakh. Purchase of goods for rupees 1 lakh on cash, for cash. Okay, this is a transaction. Now, what I'm trying to explain to you, I'm trying to explain to you the concept of dual aspect. I already claimed, or the accountant claims, or this principle argues that there are two aspects into a transaction. What are they? One is benefit giving, another one is benefit receiving. In this case, we are buying goods by spending rupees 1 lakh. So what is the benefit we are receiving? The goods we are receiving. What's the benefit we are giving? The cash. These two aspects need to be recorded. Each and every transaction has two aspects into it. Both the aspects need to be recorded in the books of accounts as per the dual aspect concept. If you record both aspects, it is called double entry bookkeeping system. In one of the classes, I think in executive MBA only, one student was asking, sir, investment made by the owner 1 lakh rupee in the business. What's the entry? Just to burden me for this entry I'm telling you now, without teaching you what is general entry. Okay, some of you may be there. He is asking, the entry is cash account debit to capital account. That's the entry. Cash account debit to capital account. 1 lakh, 1 lakh. I'm writing two places, 1 lakh, 1 lakh. That boy was asking, sir, how much the owner brought in? 1 lakh. Then how much you are writing here? 1 lakh. Again, you are writing 1 lakh in the transaction, in the journal entry. He was asking that question in one of the classes here only. But it's a ignorance of this concept of dual aspect. Each and every transaction has two aspects. Both are recorded. It's only 1 lakh actually. What he brought in is only 1 lakh. What you are buying is only 1 lakh. But entry for goods purchased is purchase account debit to cash account. 1 lakh, 1 lakh. You write in two times. Why? Because of dual aspect concept. Each entry has two aspects in it. Two are recorded. Okay. So don't confuse later when I'm telling you the journal entries. So one transaction is there, only 1 lakh is there. Why writing two times to 1 lakh? This concept only. Dual aspect concept. Next. Yeah. Yes. Suppose you are making a sales for rupees 2 lakhs. Yeah, it's not don't say single entry, simple entry, or only one entry, but there is two aspect into it. One is plus, one is minus. If you make a sales, simple. Actually, this has been practiced for ages. But today, we have gone to the computerized system of accounting, right? So that's very easy actually. But really, why these are all required means those days manual accounting was there. So we have to, at a particular day, I want to know how much is sales. Actually, how much is the sales? If you take one sheet of paper, every day, whenever you make a sales, if you write the date to whom you made a sales, that sum up will give you the total sales. The same thing, we are going to do it in a little bit different accounting manner. That's it. Okay, sales. If it is sales book, we write all the credit sales. The total of the sales book will give me the total of credit sales. Okay, but at any given point in time, I cannot find out the total sales. It gives me only the credit sales. So I want a sales account. Directly, without having a ledger, you can directly write it in the, without having a journal, we can directly write it in the sales ledger. Sales ledger. Okay, sales ledger account. You can write all the sales one by one. To Rajesh, 2 lakh, to Ramesh, 2 lakhs, to cash, 5 lakhs, to bank, 5 lakhs. What does it mean? It means I sold goods on credit to Rajesh. To bank means money collected in bank because of sales. To cash means I have just taken the cash. You can write it, but that gives some kind of confusion. Right? Directly writing in ledger. So we are writing in journal, then we are taking to ledger. Okay, ledger gives you the exclusive total of that particular account. Okay, so in case of sales made for 2 lakhs for cash, what we will do? Cash account debit to sales account 2 lakhs each. But originally we received only 2 lakhs. That's for receipt. But you lost the goods in favor of your customer. You lost the goods now. Your goods are going out. For that, 2 lakhs. Okay. Yeah, voucher. Madam, 1 minute. From whom you are getting the voucher? From whom you are getting? Dealer, from the company. Okay. So for whom you are asking about, it is about accounting of the company or accounting of you? That is not required now. What will you do? 2 days back, I went for buying shoe for my son, the school shoes. Okay. They have given me 500, 500, 500, 3 vouchers. Am I right? Same thing you are talking about? Yeah, 3 vouchers they have given. What I will do? Somebody, what they will do? They will just throw there only. Or somebody will keep safe in the home on the date of due. They will go there, 500 rupees concession. If you buy for 1,500, 500 can be redeemed. That's some kind of thing. Okay, I'll keep it in my home and all the date of purchase, I'll go and show this and I'll just redeem it. What is there to account now? Individual's account we are not talking about now. So company is going to sell you some goods 1,500, but it is collecting only 1,000 and accepting that voucher also 500 rupees. What they will make an entry? Sales account 1,500, cash collected, cash account 1,000, discount 500, to sales 1,500. That's it. That is called, concession is called discount. Actually, this discount will not be accounted like this. They will write down the direct entry, meaning cash 1,000, 2 goods, I mean 2 sales, 1,000, that's all over. They don't even consider that as a discount. This discount is nothing but discount in the profit. Actually, if you make an entry in the name of sales, that includes the cost of the product, what they bought, plus how much margin they are keeping in their product, right? Now this 500 rupees, they don't even record it in the books of accounts because they treat it as less in the profit. Automatically it will reflect in the profit and loss account. Instead of writing sales as 1,500, they will write sales as 1,000. Sales is an income. If income itself is less, then profit is going to be less. Automatically the discount is adjusted over there. That's called a trade discount. Okay, what is a better? No, I didn't tell that. I told just, then I just changed it. Sales, cash to sales, that's all. Yeah. No, I told you first like that. Then I just corrected it. Sales account 1,000, cash account 1,000. That's all. Cash account. 1 second, let me finish. No, that's only a paper, right? No. Where it is having a value? Can you go and exchange that into some other? That's only, okay. Let us come to the basic point. Accounting will come later. Why company is giving voucher? To attract customer, that's it, no. That's a paper actually. Even this money, what you're having, that's just a paper. Currency is just a paper, right? Unless otherwise somebody is accepting. If I'm giving him 1,000 rupees, if he's accepting and giving me 1,000 rupees worth of goods, then that has some value of 1,000. Otherwise, that is a tissue paper. Not even less than tissue paper, right? I'll come to once again. I'll come to that point. See, to promote your business activity, you give voucher. You print, you give voucher. Printing a voucher has some accounting treatment. advertisement account debit to cash account. Printing of voucher. Okay. After printing, you are supplying to those customers, elite customers. Those are having 10,000 rupees purchase, you are giving one voucher. Or every 1,000 you are giving one voucher. 100 rupees voucher you are giving for every 1,000 purchases. So I bought for 10,000 rupees goods. I'll get 10 voucher, each cost, each valued in your way, 100 rupees. Right? In the next purchase, if I buy for some 5,000 or 2, it will be mentioned over there, some terms and conditions. Okay. If I buy that, I can give this voucher, I can pay less by this voucher. 5,000 rupees purchase minus 100 rupees, 4,900. Now, for the company, what is the revenue? Only 4,900. So you will write cash account debit 4,900 to sales account 4,000. Yeah. This is what I know. If anybody, yeah. Voucher. Okay. Yeah. True. Yes. If you have made a separate account for that, you can just redeem from there. Okay, that's possible. In general case, what I told, it's only a marketing activity. For marketing activity, if you earmarked some fund, okay, that fund can be utilized for each and every individual customer's activity. But finally, that goes to the profit and loss account in the name of marketing cost. Marketing cost. Okay. Something you are telling, sir? Yeah, cash voucher means you'll go and give a voucher and collect cash. Is it so? What is that exactly? Okay. Okay. No, suppose I am working in your company. I am a serviceman. No, what he is telling is, suppose there is a company. Okay. There are some employees are going and servicing some washing machine or this air cooler or something like that. Okay. To whom they will pay? Cash voucher means? He is getting a paper from the company for 10,000 rupees or 20,000 rupees. Cash. Then where is the voucher? That's not a coupon. That's a legal document that he is getting some 10,000 rupees from the company. It's a voucher. Simple. Advance paid to employees account debit to cash. Matter over. Whenever he is bringing the document of expenditure, the gentleman will go to the field. No, he will spend some 6,000 rupees or 7,000 rupees. He is coming and producing the document to you. That time, you will again make an entry. Okay. Selling or repairing expenditure, some whatever the name you call, what that expenditure actually. Suppose it's marketing. Selling expense account debit to advances to the employee account credit. Remaining balance will be there in his name. For that, he is answerable. Later, he can give a bill or he has to reimburse that money. I mean, he give back the money. Don't confuse that with this. This is entirely different. This is entirely different. This is advance actually. Okay, advance given to an employee. Some company, what they will do, you spend, bring a certificate, I mean, bring the document, petrol bill or a staying bill, whatever it is. Some other company will do like this. They will give you 10. Yeah, as an advance. You spend it, even it is more, no problem. There will be a policy for that. No, you will have a policy. In your cadre, if you are in a cadre, what is a staying accommodation, everything, depending upon that. Okay. Okay, fine. So where we are now? Dual aspect concept. Okay, next one is conservatism. Conservatism means be more conservative. Conservative in the sense, see the negative side of it. Don't always see the positive side of it. Meaning, if there is a case pending against your company, I have filed a case against a company, or somebody has filed a case against my company. Both are possible. In both cases, company may be asked to give some compensation, or company may be expecting some compensation from others. In both cases, we should not take both of them into account. First case, if you are expecting a compensation, forget about it. When it comes, you can take it, no problem. But when there is a case pending against you by some employee, he is asking compensation of 1 lakh rupees. Please provide for that. Provide for that. Later, we don't know whether the court is in favor of us or in favor of the employee. We don't know. But you be ready to accept that if it is coming, 1 lakh rupee or 10,000 rupees, whatever the claim, you have to be ready to see that, to make arrangement for that. That's called concept of conservatism. Conservative. You say no, he's a conservative person, meaning traditional. He's not more open, meaning yeah, very cautious. Traditional means very cautious. He won't go beyond 40. Even if it will go in 20 or 20. Very, very traditional. He does not want to involve in any kind of risk later. Conservative person. Accountant should be conservative. Okay, you should not foresee the gain, but you have to foresee the losses, and you have to be ready for that loss. Okay, if it is not coming, again it will be taken into normal account. Okay, next. Consistency. What is consistency in general? Stable. Yeah, consistency. If you follow some accounting principle, follow it for some number of years. Okay, those days, no, we will write in exam. Who is the Prime Minister of India? Who is the Prime Minister of India, madam? She's checking in Google. No, she got a call. Yeah, she's getting a call. Who is the Prime Minister of India? Yes, this is what I want. Yeah. So it's not that popular that he expects, right? Madam, please answer. Who is the Prime Minister of India? Yeah, Mr. Narendra Modi. He's popular. Okay. So those days we'll be asked a question. Who is the Prime Minister of India? I will write. Exam. He's writing. Teacher is correcting, no? He's putting into mark. 0. This by 4 by. He's going back. Sir, you just put it into mark and given 0 mark only. Why? He's asking who is the Prime Minister of India. Sir, when I was writing, Atal Bihari Vajpayee. Sir is telling, when I am correcting, it is I.K. Gujral. So both of them are correct. Okay, this kind of thing is there, inconsistency. That age, 89, 90, that range when Rajiv Gandhi killed, that time India had some problem in the political instability. Accounting also stability. What is stability here? Stability, stable, consistency. At least for 5 years. Allow them to rule Maharashtra for 5 years. No. Why are you disturbing? You disturb. Why? Consistency. Consistency. Karnataka, you take an example. Before we had an example. Consistency. Sir, I follow a depreciation straight line method. Don't worry about this. I'm just telling a method of depreciation. If you don't know, don't worry. Just think that there is one method that I'm following. Just to follow for some years. Last year, I told depreciation is going to be charged on straight line method, method A. Next year, I'm telling, no, method A is not good. I'm going to follow method B, diminishing balance method. I'm going to follow. All right to change. You are the boss for your business. Within the framework, within the legal regulations, you can do whatever you want. You are allowed, but at least follow certain consistency. Be consistent for some number of years. Unless otherwise there is a pressing demand for you to change your accounting policy, don't change it. That's the meaning of consistency. Next one, materiality. All material fact need to be disclosed in books of accounts. Material fact. What is material fact? Fact we know. What is material fact? No, material is goods. Okay, that's one meaning. English meaning, but material fact is different from just material. This is material. This is material. But we are not talking about material object. Here material means some other meaning. Material fact means knowing or not knowing of that fact, my decision will change. Significant fact, you can say. Significant fact. Suppose online class is not allowed in Dayanand Sagar University. If that is a fact, if you know this, your joining or not joining is being influenced, right? Where the class will happen, what is the fees, what are the subjects? These are the material fact about a course, material fact about a program. Similarly, material fact about a business organization. By knowing that, my decision will change. Okay, that fact need to be disclosed as a footnote or even in the accounting information. That's what we call it as material fact or materiality concept. Okay, so these are going to be used in preparation of your books of accounts, presentation of your books of accounts, preparation of your financial statement, and also presentation of your financial statement. Okay, these are the guiding elements. Okay, any doubt in this? Yeah, realization concept with the materiality concept. How realization concept, both are supporting with each other. Business. No. We are foreseeing the losses, but we are not foreseeing the gain. That's what concept of conservatism. Okay, which one you are referring to? Previous one, realization concept. Where is it? Yeah, realization concept. Realization concept, it's supporting that actually. You have to realize the income only when it is, you have to record the income only when it is really realized. My friend will come tomorrow. He will buy 2 cars from my car showroom. Let him come. Let him buy. After he buys only, we are going to record it. Both are actually supplementing with each other. Both are same, slightly changing, but not contradicting with each other. Realization concept says realize the income only when it is true, when it is possible. There's a contract. Suppose your friend has come and signed the invoice, 2 car purchased. We raised an invoice on him. We have to write journal entry for that. You have to record that income. Okay, that's what your concept of realization. Same thing is there in conservatism also. Conservatism is about some losses. If loss is there, foresee the loss. Realization does not talk about loss. It talks about income. Both are talking about 2 sides of a coin, but both are same actually. Loss, foresee it. Income, don't foresee it. Don't take a word called foreseeing. Realization says don't foresee the income. But this another concept, what is that? Conservatism says foresee the losses. In that way, both are same only actually. Okay, next, not contradicting. Losses, yes. Realization talks about only income. Don't record any income which is not realized. Simple meaning. Okay. Then concept of conservatism says that please record for anticipated losses. Anticipated losses means it's not like tomorrow there will be one accident in my company. I will record that. We are not talking about that. Somebody raised a dispute. You gave compensation for a workman 10,000 by working in your machine. He was working very properly by saying like that. He put his hand is cut. He is claiming 1 lakh rupee. Each and every human organ is having value. I'm not talking about the value in the organ market. I'm talking about the value in the legal. We have value for each and every parts of a human being. Okay. So he is claiming 1 lakh rupee. Right hand. Okay, how much? Sir, 3 inches or 4 inches, 5 inches. Depending upon that, he is claiming 1 lakh rupee. Manager, your people has given only 10,000. He received 10,000, but he is going to the court of law. I want 1 lakh rupee. This is going to be decided by the court. We and that person is not the people to decide. Court is going to decide based on the law, Workmen Compensation Act. Based on that, we are going to decide. So you make 90,000 rupees in your mind and keep some provision in the books of accounts. It may take place in the future. This is what? Conservatism. Concept of conservatism. Foresee the losses, not the income. Okay. Next. When it is raised, when the person is going to, when it is numbered, numbering, in court, numbering, all the cases what you're filing cannot be numbered. They'll just dismiss. This is not a case of referring into the court. Please go away. Sometimes they'll ask you to pay fine also. Yeah, 10,000 rupees. You pay the fine. You have wasted the time of the court of law. Pay 10,000. Otherwise, 1 month jail. Like that also some judgment will come. That's not judgment. The beginning itself. The numbering also will not take place. But sometime what happens? No. Evening 7 o'clock will apply. 8 o'clock it get numbered. Okay, 11 o'clock argument trial starts. Morning 3 o'clock judgment will be delivered. One of such case just last week happened in Tamil Nadu. Morning 3 o'clock judgment. Because 9 o'clock there is an event. The dispute is about that event. So overnight. That's also possible in India. Okay, everything is possible. One case may be 30 years. One case may be 3 hours closed. Depending upon the procedure. Okay. Depending upon procedure. Okay, I think I answered your question. Correct, sir? Yeah. So let us go to the next one. Accounting. Yeah. So when the case is numbered, you can make a provision of that. If it is true for trial, if it is meant for trial, if it is in trial, you have to make a provision. Okay. If you are not making, what's the problem? Later you are going to suffer. Suppose the court is taking a decision that you have to pay 1 lakh. The argument, you have to pay 1 lakh. That time you should not be in trouble of arranging that 1 lakh rupees. That's the concept. You have to keep ready. Ready means not in a court cash. You should record it in a provision. Okay. Yeah, this we discussed actually. All lined in detail in these paragraphs. You read it again later. Yeah, these three also we discussed now: going concern concept, consistency, and accrual. We already discussed in the last class about the financial statement. Two statements. One is profit and loss account. Another one is balance sheet. Okay, just for one question. Look at the first question, multiple choice. All the following items are classified as fundamental accounting assumptions, except business entity is a basic accounting assumption. Going concern is also a basic accounting assumption. Then it is only consistency. That is a convention of accounting, right? Okay, like this, there are some questions you can just go through. Of course, we are not having a multiple choice question in your exam, but for a clarity, you go through that. Some clarity will be there. Clarity. Can we come to the ledger now? Sorry, journal now? Yes. Huh? Sorry? Yes, definitely. We are going to take a long break. 3 o'clock, we are going to take a short break. Okay. This usage, I'm not very familiar. I want to take another file now. Anybody can help me how to take the next file? Yeah. Yes. The next file is visible for you. Those are online. Okay, journal.
Yes, sir. Yes, sir.
Yes, thank you. Journal. Now we are going to make journal. For that, we have to follow all those guidelines what we discussed so far. But in addition to that, some rules for accounting is there. Golden rules, they will say. Rules for generalizing or rule of double entry bookkeeping. Golden rules of accounting, like that they will call. Okay, what are those and how do we understand? To make a journal entry, I need this rule. Double entry bookkeeping system classifies the entire account heads into two. You name any account that should be categorized in any one of these two. What are those two? One is personal, another one is impersonal. You take any transaction that take place in the business organization, that should fall under any one of these two category. One is personal account category, another one is, other than personal, everything is called impersonal. Impersonal. Okay, what is personal, sir? Personal account refers to any account that relates to, that deals with a person, Rajesh, Ravi, Usha, Shyam, Rani, like that. Natural person. And artificial person. Who is artificial person? Dayananda Sagar University, Bangalore University, Infosys Limited, SBI Limited, Bescom, IBMP. These are all called as artificial person, entity, any entity. Business, non-business, any entity, organization. Third one is representative person. What is representative person? Actually, my name will not be there, but I have a due from that company. Say, for example, salary payable account. In your company, there's an account called salary payable account. If that account is settled, money will come to you and also your colleagues and also your other colleague, like that. But all your names are not there in the account. It will be there in the employee list on roll. It will be there. But in accounting, it won't be there. So that account is called as representative account. Rent payable, salary payable, commission payable. Okay, these are all called as representative account. You don't write in his name, but you will write salary payable account. Okay, so these three are included in one head. That head is called personal account. Other than these three, everything is called impersonal account. In impersonal, we have two types. One is nominal, another one is real. Real, anything which is really existing. Furniture, land, building, vehicle, motor car, lorry, equipments, etc. Anything, any transaction relating to this is called as real account. Another one is nominal account. We only name it. We only name it. We give some name for some headings for account. Say, for example, you are having 1 lakh rupee in your cash box in the morning. 1 lakh rupee. Your landlord is coming and you are giving 10,000 rupees. What you will call that 10,000 rupees payment? Huh? Already we taken. After taking, you are going to pay advance. Rent. Rent. Okay. Sorry, sir. What is recurring? Let it recur. We don't worry. But now it is paid rent 10,000 rupees. Next month, let him come. We'll give another 10,000. That's called recurring. But as of now, it is rent paid. The 10,000, if you take from the bottom, or if you take from the top, or if you take from the middle, anything, it is called. All are money only. All are 1 lakh. From 1 lakh, you take it. But you are only calling it as rent. The owner is coming asking, I have kept here 1 lakh rupee, but now only 90,000 is there. What happened? He will say, I paid the rent of the month, 10,000. You only telling that rent. Okay. Another 5,000 you are giving to your manager, salary, 5,000 rupees, salary. You are calling it a salary. You are only naming it. If you pay that 5,000 to the manager, you are calling it as salary. If you pay the same 5,000 rupees to the political party coming to you and asking some money, you are giving 5,000 rupees. What do you call? Donation, you are calling. Same 5,000. So what I'm trying to say is, same money, depending upon the person to whom you are giving, the purpose for which you are giving, it takes some name. It gets some name. Those accounts are called as nominal account. We only name that account. Example, rent account, salary account, commission account, interest account, donation account, etc. Okay. Name. We give name. Okay. So whenever there is a transaction take place in a business organization, you should be analyzing the transaction based on this logic. Which account that transaction is affecting? We already understood there are two aspects in a transaction. Aspect A, aspect B are 1, 2. First aspect is affecting which account? Second aspect is affecting what account? Sometimes both the aspects in the same transaction will affect only single account. Sometimes one will affect real account, another may affect on personal account, maybe depending upon the transaction. Okay, now you tell me one more transaction. We'll take an example. Sir, you tell me one transaction. One business transaction. Very difficult question. I will ask this one only in the exam. Name 10 business transactions. Yes, sir. Let's sir will tell. Yeah. Yes, sir. Insurance? Insurance? Only one is enough. What is it? Insurance payment. Insurance premium paid. How much? Some 10,000 or only 1,000. 10,000 rupees has been paid as insurance premium. It's a transaction, right? We will get an insurance premium receipt. Okay, transaction. Now, can you please think what are the two aspects are affecting here? Or what are the two aspects into it first? What are the two things are in this? Expenses. Money goes out. 10,000 rupees going out of our bank account or out of our cash. One aspect. Another aspect. We are buying the comfort of that compensation. We are buying the insurance. Benefit received is coverage of that particular life or an object. Very good. The two aspects are there. Right? Now we have to look into these three accounts. What are three accounts? Nominal, real, personal. Though personal account has three aspects, we call only personal account. Okay. So now two aspects. We'll take first aspect. Money gone out, right? Relating to which account? Real, nominal, or personal? Which account is now we're talking about? No, which one are you talking about? Again, insurance is a basic concept now. We already classified that into two, right? One is money going out, another one is benefit coming in. You take money going out. Money going out is about real or nominal or personal? It's a real one, no? Money. Money is real or not? Money is real, right? You can see money, right? Have you seen? Yeah. You have seen. So money is real. It's a real account. One side is real account. One aspect is affecting real account. Another aspect is receiving the benefit of coverage, risk coverage. That is the expenditure, right? We are buying. We are buying it. Okay, so that is called which account? Real or nominal or personal? Nominal. Nominal. You are spending to buy that. Okay, you are spending to buy that. So one is real, another side of it is nominal. So we have to refer the rule of both nominal as well as real. Keep in mind. Now come to the format of a journal. Then you can get better understanding. Format. Just to keep in mind, we'll continue this with another 2 minutes. Just another 2-3 minutes. We'll finish this and go for a break. Okay. Look at this. This is the format of a journal. Format of a journal. Are you able to see? Journal. Date column, particulars column, ledger folio number column. LF means ledger folio number column, debit amount, credit amount. This is the format of a journal. It's a book actually. Book. In this book is going on page after page. Okay. In this date column, you have to write the date of the transaction. Okay. And this is for one. After finishing it, one line you are drawing. Then you are going to next tab, next one. Okay, next day is going on. Or the same day, 10 may be there, 20 may be there. You can write the same date again and again, and you can write the entry. Okay. Now come back to the rule what we discussed. Okay. There is a particular rule for these three accounts. I just want to show you. Real account rule says debit what comes in, credit what goes out. Nominal account rule says that debit all expenses and losses, credit all income and gain. Okay. And then one more account, that is personal account, says debit the receiver, credit the giver. I just wanted to show you, it is there in the slide. There it is. Please, if you find that, stop me. Yeah, it is here now. Look at this table. Yeah, according to personal account, debit the receiver, credit the giver. Don't worry about this credit debit. It's nothing but plus minus or negative positive, like that. Okay. So debit the receiver, credit the giver is the rule for personal account. Suppose your account is affecting personal account nature, then you have to apply this rule. You have to see whether it is credit receiver or giver. Depending upon that, you have to take debit or credit. Okay. You understood that format, no? Date column was there, and particulars column was there, and then ledger folio column was there, debit amount, credit amount. Okay. In the particulars column, you have to write this entry based on this rule. In amount column, you write the amount for debit as well as credit. Now take an example of the same transaction. Premium paid, insurance premium paid 10,000 rupees. Cash account is affected. Another one is premium account is affected. Premium is nominal, insurance premium is nominal account, cash is real account. What is the real account rule says here? Real account rule says debit what comes in, credit what goes out. Is it coming or going here? Cash going out. If cash going out means, oh, we have to credit the cash. Credit the cash. One is determined. Another one. What is for debit? Premium. Premium is expense. Expense comes under which account? Nominal account. Nominal account says debit the expenses. Expenses and losses should be debited. So it's an expense, right? So insurance premium account debit to cash account. Insurance premium account debit to cash account. Where you would write? You would write it in the particulars column. Okay. Just for example. Yeah, look at this. It is written here. One account debit, one account credit. You write the date first here, which date the transaction took place, and then journal entry. Then there is some about this journal entry. That's called narration. Being insurance premium paid rupees 10,000. In the bracket, only in this column. So I'll be very particular about the format actually. Okay, so in exam, you have to write exactly like this. This sentence, this line is not required. This line is not, these two lines are not required. Only one cell. You write all the two entries. I mean, two aspect. Okay, so come again. This one, insurance premium account debit in our example. Insurance premium account debit to cash account. Debit, I write DR. Okay, amount I write in the debit side. Credit, I don't write any CR or DR. I just leave it. But while saying, I'll say like this. Insurance premium account debit 10,000 to cash account 10,000. I don't say again to cash credit. It's understood. To means credit side. Okay. One more entry will take orally and we'll go for a break finally. Okay. Cash paid to Mr. Rajesh. Cash paid to Mr. Rajesh. What are the two aspects into it? Which are the two accounts that are affected here? My cash balance is going to reduce. The money what I owe to Rajesh is also going to be reduced. Money what I owe to Rajesh is also going to be reduced. The relationship between me and him is going to be come down. Financial relationship. Okay. So what is the account affected here? Rajesh is a person, a personal account, right? Rajesh is a person, personal account. Cash is real account. So these two account rule I ought to refer. Cash account rules, I mean, real account rule says credit what? Goes out. What is going out? Cash. So to cash. Cash is going to be credited. Okay. Personal account rule says debit the receiver. Who is receiving it? Rajesh. So Rajesh account debit to cash account, being cash paid to Mr. Rajesh. That should be there in the particulars column. Date you write. LF number you leave it blank. LF number you don't have, because what is LF number? LF number is nothing but the page number of the ledger where this entry will be there. So we don't have that connection in academics. So we just blank, leave it blank. Amount column, 10,000 in debit, 10,000 in credit. Write the narration. Draw one line only for the particulars column. Not full like this. Only for particulars column you draw one line. Then go to the next transaction. If date is not given, 1, 2, 3, you take number, serial number. If date is given, take those dates in the date column. Is it clear? We'll continue with this by having some more transactions and make ledger, I mean journal in the session after the break. Take break and 10 minutes, come back. Those who are online, it's now break for 10 minutes. Take break for 10 minutes and come back.
Okay, sir.
Okay, can we see the rest of the journal entries? Yes. So you can just start writing in the books so that it is easy for us to do it in the exam. Okay, you take this format, leave one page and take this format. I'll give some transaction in that page what you are leaving. We'll write the transaction and we'll enter the entries in the journal entry, I mean the journal format. Okay. Leave one page in your notebook, go to the next page, take the format of journal, journal title, and then take this format, date column. Date column can be that your margin. You already have a margin in your book, no? Date column, then particulars column, Then you have one LF column, very small one. Ledger folio number column, very small one. Particulars column can be little bigger, 50% of your notebook. That page can be a particulars column. Look at this particulars. It is little more space, right? Yeah, particulars column. And then LF number column, then debit, then credit. Okay. You just take this format and go back to the previous page which you left blank. I'll give you one or two transactions one by one. We write the transaction, then we'll try to find out the journal entry for that particular transaction. Is it clear? Yeah. So I hope you're understanding the journal format. You have some idea about the rule of generalizing. Okay, now we are going to do some hands-on experience of that particular generalizing. Okay, first transaction. All are independent in nature. Okay, these transactions are not connected with each and everything. It's not. It's independent, one after another. Okay. Mr. Ajit started a business. Mr. Ajit started business. Mr. Ajit started business with a capital of rupees 10 lakhs. With capital of rupees 10 lakhs. What you are seeing in the screen is just an example. Some transactions are there. We are taking in addition to that some of the transactions. Okay, rupees 10 lakhs. All right. So now the business is receiving 10 lakh rupees cash from Ajit, who is the owner of the business from today onwards. Okay. Now in the business, we are going to, make journal entries in the books of business. Okay. So come to the journal entry. What is the entry now? What is coming in? Cash comes in. Capital is a name for that cash, but actually it is cash. Who is giving? Ajit is giving. So two accounts are affected here. What are the two accounts? Cash account and Ajit account. Cash comes under real account. Ajit comes under personal account. So these two rule to be referred. Based on that rule, you have to make journal entry. Okay. First, in date column, write 1. Just number, serial number 1. We don't have date here, so we are writing serial number 1. Okay. If it is given date, you have to write the date. Okay. Now, in particulars column, you have to write the journal entries, right? So, what entry will you make? Cash comes in. According to real account rule, debit what? Comes in. So, what is coming in? Cash. Write it cash account debit. You have to start that C, cash. C is there, no, right from that particulars column. You should not leave some space. Look at this. Here, no, there is no space in between this line and this letter. Cash account DR. Okay, DR. That also you have to write in the same particulars column at the end of the particulars column. Here they have written here separately, but you write it here. Particulars column margin is there, no end margin. There your R should end. DR. Okay. Cash account debit. Fully. If you return, leave it now. Okay. You can write A or C. Small a slash small c. Okay. Lower letter. Cap C. Okay. Account DR. Okay. You should write here only in this space. If you return, leave it, no problem. Don't write it here. You write here in this place. Look at the board. Look at this. Here you write DR. If you return, no problem. Leave it. Next one, you do it rightly. Okay. The margin where it ends, you have to end the letter R. Right. Next line to be credit. Look at this. There is some space purposefully left. Why? To distinct from the debit to credit. Leave one tab. Leave one tab and start the next account to be credited. What account to be credited? Ajit, wait. Ajit account to be credited. But Ajit is not just a person. Ajit is not just a person. Who is he? He is the owner of the business, owner of this business. There will be so many Ajits coming and dealing with you in future as a customer or as a supplier. So to have a distinct from those people with this Ajit, and also he is giving money as investment. Okay, so we can write just capital account. Capital account. Yeah. Second line after on tab, to capital account. To capital account. Listen carefully now. Listen to me. Suppose only one owner is there, you can write just a capital account. No problem. Suppose there are two owners. Partners are there. That time you account, because whose capital account we don't know. So we should prefix the name of the one partners. Apostrophe S capital account. Suppose Ajit and Vijay both are joining together by contributing 1 lakh each and starting a business. Your entry will be, don't write it, just tell. Your entry will be cash account 2 lakhs debit. Cash account debit 2 lakhs. To Ajit's capital account 1 lakh. To Vijay's capital account 1 more lakh. Okay. Now you write the narration now. Both the side write the amount. Debit side 1 lakh and credit side 1 lakh. Credit side you write the just corresponding to the equal to the on the same line of cash you have to write 1 lakh. How much? 10 lakh. Okay, 10 lakh. Second line you have to write 10 lakhs in the credit side. Okay, 10 lakhs. Yeah. Yes. Yeah. Here 10. Correct. Yeah. Okay. Being business started with cash of rupees 10 lakhs. Being business started with cash of rupees 1 lakh. Once again, you need not write like this. Ledger account we can do like this. This is sufficient. I think this space will be more than sufficient. If you can write like this, 1 page, it is more than sufficient. In exam, it should be written like this. If you write like this in exam, it will not be valued. Please practice like this. The 1 page is enough. Now it's okay. Okay, 1 page is sufficient enough for a journal format. Date column, that margin can be date column. Particulars are 40%. Then LF and then debit, credit. Okay. Next, draw one line only for the particulars column. Yes. For the particulars column. Last line you written of being business started with cash of rupees 10 lakh. Only for that. Okay. If you have pencil or something, if you want color, you can draw. Otherwise, simply no, not like this. Only that particulars column you have to draw one line. Huh? Yes, exactly. After the narration, just one line, only for that narration, only for that column. Okay, only for that cell. Right? Okay, this is one entry. Two things are there. One, how to make that neatly. Another one is how to make that entries logically. Okay, both we are learning. Next, go to the question. Point number 2. Point number 2. Okay. Mr. Vijay started business with cash is 25,000. Cash of rupees 25,000. 25,000. Furniture worth rupees 15,000. Furniture worth rupees, comma, stock in trade worth rupees 50,000. Stock in trade worth 50,000. What's the difference between this and the previous one? Both are same in one aspect. That is, both are business starting. But in first case, he started the business only with, here it is started with little more items. Furniture is there, stock is there, cash also there. So what's the entry? These three things are coming into the business. He had this in his private domestic thing. Now he is bringing that to business and he's going to start a business. So all these things put together is capital. In first case, he was giving cash to the business. Business is going to buy all these things. But second case, he is having the items. He is bringing that item to the business. Okay. So what's the entry now? Cash account debit 15,000. How much? 25,000. Furniture account debit 15,000. Stock in trade account debit 50,000. To capital account, how much? To capital account, how much? 90,000. All put together. He is bringing only cash 25. Remaining items he is bringing from his own personal to business. So that's also is in investment in the business. Okay, write it. Entry. Point number 2. Go to the journal entry. Point number 2. Okay. Cash account debit. Cash account debit. Debit side, write the amount 25,000. Furniture account debit. Write the amount in debit column. How much? 15,000. And again, cash account, stock in trade account debit. What is stock in trade? He had some goods. He is bringing that. He is going to sell in the business form. Okay. Stock in trade account debit. What? How much? 50,000. 2. Leave some gap and then start next line. 2 capital account. 2 capital account. 2 capital account. How much? Write it in credit side. 90,000 total. 90,000. Being business started with cash, furniture, and stock in trade. Being business started with cash, furniture, and stock in trade. So this is how you have to make journal entry, and these journal entries should be there in a continuous sheet. Okay, the format what you're making is for one page, right? Yeah. Any doubt in this? Next. Being business started with cash, furniture, and stock in trade. All right. Okay. Third one. Third one. Which one? No, write the narration, then you write one line like this. Like this one line after writing the narration. Okay. Third one. Third one. Mr. A and Mr. B. Mr. A and Mr. B started a partnership firm. Mr. A and Mr. B started a partnership firm. By investing rupees 2,50,000 each. Rupees 2,50,000 each. Rupees 2,50,000. Come to the journal entry. You tell me now what's the entry? Cash account debit, how much? ₹5 lakhs. Cash account debit 5 lakhs. The business receives 5 lakhs, right? Cash comes in. According to real account rule, debit what? Comes in. Cash has come in, cash account debited. Cash account debit 5 lakhs. Cash account debit 5 lakhs. Two. Yeah, you can make two entry also. Cash account debit 2.5 lakhs. To A's capital 2.5 lakhs. Cash account debit 2.5 lakhs. To B's capital account 2.5. That's time based. Two entry. That is called simple entry. What we are going to make is compound entry. What is compound entry? It will have one debit more than one credit, or one credit more than one debit. That's better to save the time. So write it. Cash account debit 5 lakhs to A's capital account. Yeah, right? Yeah, to A's capital account 2.5 lakhs. Again, to B's capital account 2.5 lakhs. Being business start cash by A and B. A and B. Okay, after starting a business, what you'll do? Okay, one more time we'll start the business. Okay, one more time. Go to the journal entry. Yes. 5 lakhs, correct. Then 2.5 lakhs, 2.5 lakhs. A's, to A's capital 2.5 lakhs, to B's capital 2.5 lakhs. Being business started by A and B with cash. Okay. Come to the general question again. Fourth one, right? Question. Yeah. A joint stock company was started. A joint stock company was started. A joint stock company was started. By issuing 1 lakh equity shares. 1 lakh equity shares of rupees 100 each. Of rupees 100 each. Of rupees 100 each. What is equity share? What is joint stock company? Joint stock company means an entity registered under Indian Companies Act. So there are more owners. They are called as shareholders. So how many shares are there? 1 lakh shares are there. Okay, before that, what is equity share? Ordinary share. What is ordinary share? Common share. What is common share? Which is not a preference share. Common share is a share which is not a preference share. Then what is preference share? Don't say other way around. Preference shares are not the common shares. We should know, we should stop this at one particular point in time. Then we can understand meaning. What is preference share? Preference shares are those shares which are having some priority in receiving share of profit as well as in receiving the capital at the time of winding up of the company. That's called preference share. If I am not a preference shareholder, I'm obviously to be a equity shareholder. What is equity? If you want to say in another way, equity holders will receive the benefit of the company at the last. If the company is closed, the claim of equity shareholder will be settled at the last. Their claim is residual in nature. What is residual? Leftover. It can be much or it can be less. Depends upon the company's performance. So they are the real owners of the company, you can say. Equity shareholder, common shareholder, okay, ordinary shareholder. These three are one and the same. They are the real owners of the company. Founders are also just a shareholder only. They are also equity shareholder. How you and the Ambanis are different in the company? They found that company, but they don't have money enough to found that company. They seek your help. You given the support of money, so you are also a part owner in the company, but you are not having any idea. You are having only money. You gave it. They have an idea and they also have some money. So they are trying to start that business. You are joining with them. Same like they are also shareholder. So don't think that promoters are something different. In accounting point of view, there is nothing called promoters. They are also shareholder. In this, 1 lakh equity shares are issued. The owner, the founder, may be keeping some 50,000 shares with them only. Meaning they have money. Maybe majority sometime. See, there is nothing called majority. 30 MLAs can form the government. Out of how much? 200. Connect to the company. What I'm saying is, they need not have majority shares. What is majority share in this 1 lakh? 50,000. One share is called 50,000 plus 1 is called majority. It is not necessary you have to keep 50,000 shares to have a control in the company. You can have just 10%, no problem. Remaining 90% are there in the general public. I don't know who is the another shareholder. I may have 100. You may have 1,000. You may have another 500. You may have 50, 20, 30, like that scattered around the world. But how much you are having? 10,000. If you stand, 10,000 shares are there with you. Remaining 90,000 shares are not there with one person. It is there with the many people. How, when they will join, they don't even know who is having another share. Then they don't think to join. But this is risky. In this company, you can be a chief minister. I mean, you can be a managing director. You can be a CEO. You can have a control, 100% control you can have. But when the problem starts is, suppose your company is doing extremely well. You are minting money like anything in the market. You are the monopoly in the market. Somebody is eyeing on your business. They will try to buy your business. That time it is how? They try to find out wherever the scattered people are there. Scattered people will not join together, but scattered people are very greedy. I'll give you 50 crore, come to Assam, people are going. I'll give you 50 crore, come to Assam, people are going. Meaning, your share is worth rupees 200, but I'm giving you 250, 300, 400 I'm giving you. 400 means you just laugh, okay. 500, sir, take it, give 500. People are ready to buy, sell it. So some people who are eyeing on your company, it is called hostile takeover. Hostile takeover. Mindtree and L&T, correct? That time there was a conflict. People are having lot of money. Then they are trying to buy this Mindtree. They are not giving it. Then they went for buying from the market. 900, I think it was going 900. I'm not sure about the value. Okay, that time people are selling it. So they were achieving it. Hostile takeover is possible when you do not have 50%. That time it's a problem. Otherwise, you can run the company with your own decision making. Okay, in the board, other people will come and sit. That time influencing will happen. Then company will be going to another person. There's another company called Tamil Nadu Mercantile Bank. Long back, there was a case. Okay, some NRI was buying this. He was succeeding in it. He bought it. This bank was opened, started by one community people for their own community development. Later on, it became a popular bank. Pan-India bank it is. Tamil Nadu Mercantile Bank. It is there in all over India. Okay, one fine morning, they are checking the shareholding list. Majority shares are held by one single person. That's a private limited company. You cannot sell your shares to outsider unless otherwise the existing members are accepting. In spite of that, they sold it. Majority went to Sivashankaran. There is RPG cellular was there those days. Yeah, huh? Yes, yeah, Sivashankar. RPG cellular at that time. RPG silver. He bought. Then the case was referred to it is the banking company. It was referred to Ministry of Finance and RBI, and they were coming for a compromise. This fellow is very much adamant. I bought it. That's all. But these people are telling it's our community bank. We want this bank. We can't give like that. So you please tell some amount. We'll give back the money and we'll get back the share. One share was equal to 8,000 rupees. That day he was deciding the amount. 8,000 rupees in the presence of Chidambaram and RBI people. They were just arbitrary settlement. Okay, you just refer it that cases. So this is a part of majority and other things. Okay, that's a strategic business. Come to the accounting. Yeah, now he's starting a business with 1 lakh equity share. What's the entry? Capital, cash, bank account debit. Okay, it's a company. It's a bigger amount, so it should go to bank. So bank account debit, right? Instead of cash, we are writing bank because bank receiving money on behalf of the company. Bank account debit to what? Equity share capital. Equity share capital. Instead of writing the individual names who and all subscribe the equity shares, we are writing one single word, that is equity share capital. Amount is how much? 1 lakh into 100. One share is equal to 100 rupee. So 1 lakh shares are issued now. So 1 lakh into 100 is equal to 1 crore. 1 crore debit, 1 crore credit. Narration being company started with share capital of 1 crore. Being company started with share capital of 1 crore. Okay, as soon as we start the company, what will you do next? 1 crore. Yeah. What else will you do next? After the company is started, what do you do? You proceed and go. What should you do? Tell me then. You run the business. Running business needs. Fund is there now. 1 crore is there. You don't want 1 crore. Huh? People we need. Okay. So before that, building is needed. Okay. Everything is needed. But basic thing, what is that? Modi is telling, government of India is telling something. Huh? Go digital. What is that? Go digital, no? We can't give cash. Government of India is going to stop printing cash, printing currency. You know that? Don't know in the long run. What we should do for running a business? Basic thing. GST. Okay, sir? Yes, sir. We have to open a. So many banks are open. We have to go there and open our bank account. Government of India is also thinking not to have too many banks. They're going to have only one bank. Okay. Some bank they'll have only SBI. They'll change the SBI name also. State Bank of India is not good, no. Bharatiya State Bank or something. Okay. So point is you have to open a bank account. Simple. Before buying goods, before buying land, before buying building, before paying GST, everything, we need some bank account. Okay. In this, I already told you, independent in nature, because in the previous entry, already bank account was opened. I'm not talking about that. It's another entry, simply. Write it. Open the bank account by depositing rupees 1 lakh. Okay. Yeah, question. Open the bank account by depositing rupees 1 lakh. Just an example. Don't connect this one and the previous one. Previous one already started a bank account. Okay. So what to do? Open the bank account by depositing rupees 1 lakh. What's the entry? Bank account debit to cash account. Very good. Bank account debit to cash account. If a company opens a bank account by depositing rupees 1 lakh, this is the entry. Okay. Bank account debit to cash account 1 lakh. 1 lakh. Being bank account opened by depositing 1 lakh rupee. Being Bank account opened by depositing 1 lakh rupees. Yes, sir. Yeah, 1 lakh to cash account 1 lakh. Correct. Exactly. Being bank account opened by depositing 1 lakh. Listen, suppose you are having already one bank account. You are opening another account in the same bank or in a different bank. That time you cannot write like this entry. Again, there also bank account is there. Will be there. That time what should you do? Name of the bank. Suppose if it is two different bank, SBI account debit 1 lakh to cash 1 lakh. ICICI bank account debit 1 lakh to cash 1 lakh. Suppose in the same bank you have two accounts. SBI you already had an account, have an account. Now you're opening one more account. That time account number. That's simple logic. Account number SBI within bracket 00405041 account debit to cash. Okay. We didn't write all those things in detail. You just keep in mind the logic. Next, after that, what should you do? You have to buy some goods. You have to buy some goods. Okay, next in the question. Bought goods from Vijay Enterprises. Bought goods from Vijay Enterprises for rupees 5 lakhs. For rupees 5 lakhs. For rupees 5 lakhs. Okay, before we write the entry for this, we have to define what is goods. What is goods? Sir, what is this? We don't know what is goods. Yeah. Products. Okay. Good answer. Anything else? What we? Goods and expense. Okay. What is goods actually? What is good? This is good. What is this? Ford truck. Truck is a good or not? Truck for some company. Which company, sir? Truck manufacturing company. Truck is a good. Truck selling company. Truck is a good. Mining company. Truck is a mining company. For mining company, truck is good or not? It's not a good, first of all. Very clear. Not a good. All are expensive. No. Buying truck is an expense. Whether it's a good or not, also expense only. You are buying trucks. 10 truck you are buying. 10 trucks you are buying, and you are displaying in your premises. It's ready for sale. In that case, the truck is good. Good, man. It's a good. They are goods. You bought some truck from truck manufacturing company and you're displaying in your premises, which is ready for sale. That time it is good. Goods, merchandise, product. Okay. Suppose you are a mining company. You are a miner, mining company owner. Your mining company buys 2 trucks. Are the trucks good? No, they are not a goods. Why? They are going to be used in the business, mining business. It will go under the mine and bring some material out. Transporting purpose, it is going to be used. So it's going to be a fixed asset for the company. Good is a current asset. Truck, if it is used in the business, it is fixed asset. That's why he's telling. For some company, truck can be a product. For some company, it is not a product. It could be asset. Similar example, Fatima Furniture Company. For them, what is goods? Furnitures are goods. Dayananda Sagar University. Are furnitures goods? No. First of all, it is no. It's not a goods. Buying furniture by the university is not to display and sell. It is for make the student to comfortably sit and write. Okay. So that's the difference. Good is a revenue expenditure, recurring. Today also I will buy good. Tomorrow also I will buy good. Any day I will buy goods. Because that is my business. Buying goods, processing it, or just simply selling it. Okay. So whenever I refer goods, that means it can be a raw material, or it can be a stock in trade. Please understand two words. Everything is coming under the term inventory only. Everything. Inventory can be three types for a manufacturing company. Raw material, work in progress, finished goods. These three collectively called as inventories in a manufacturing company. In a trading company, what is inventory? Only one thing, that is stock in trade. Stock in trade. But stock in trade can be many. Cotton, yarn, thread, something like that. Even in furniture company, dining table, okay, sofa set or something else, writing table, computer table, different sets, different products are there. All are called as stock in trade collectively. Okay, so whenever we say goods, it is for the purpose of selling or for the purpose of reprocessing it, processing it. It is going to be an input. That time only you have to use the word purchase. In English, buying anything is purchase. But in accounts, when I say purchase account, it refers to purchase of goods. Real estate company, purchase of land is a good only, no? It's a good actually. See, you are buying 10 acres of land. What for you are buying? Are you going to construct one commercial complex? Are you going to let it out? No. Your purpose of buying 10 acres of land near Anaikal bus stand is to develop that, make all possible plan and getting some approval and then selling. So that time it is a good. It is a merchandise. It's an inventory. To be very specific, it's an inventory. No, why you worry about movable, innumerable? It's an asset. Land is an asset for everybody, even for real estate company, it's an asset. The current asset. For them, it is current asset. Today it will be a land. Tomorrow it will be a building. Day after tomorrow it is nothing because you sold everything. It becomes cash. It becomes debtor or it becomes bank account. It will current. What is current? Current means what? Floating in nature, changing its form from one to another frequently by nature of itself. That's the meaning of current. Current is there. Electricity, you say current. Current means it's floating always. So land is there today. Next month it may not be a land. It will be a plot, separate plot wise it will be there. Another 6 months, it may be a building. Suppose you are constructing also. You are builder and developer and builder. Okay. No, sir, I just develop. I don't build. Okay. You will selling to some customers. Every Saturday, Sunday, you will call. Okay. We are from so developers. We developed 2 kilometers to airport, 5 kilometers to port, 2 kilometers to universities, 1 kilometer to hospital. Like that, they'll call. No, that's called material, raw material only. Raw material. They'll sell it out, encash it. Again, it becomes cash. You go on to buy another land. So it's changing. So that's a product, raw material. Even house, the units are there now. Plot, you say, no, villas or some apartments. Unit, one by one another unit. No, all are product only. No? Product only. In real estate business, it's a product. Okay, but for the university, it is a fixed asset. Suppose IIM Bangalore has purchased 400 acres of land near Anaikal. They already purchased. I think they are going to start. Okay, already started. Huh? Okay, they are outdated. Okay, some courses are happening. Some courses are happening there. Construction. Okay, so that is called asset, fixed asset. They buy, clean it, they construct building for their own purpose. Okay, so the person who is buying decides whether it is current asset or fixed asset, purpose for which it is bought. Fatima furniture buying furniture is an example for buying goods. Okay, Prakash Plastic Limited is buying furniture, is an example for fixed asset. Their business is dealing in plastics, but they are buying some furniture to make the customers to sit or the employees to sit. Okay. Yeah, that's correct. Correct. They also need furniture. No, they also need furniture. So far developers, they also want some building to sit. So that is their asset. That's not a product. Yes, that's what I'm doing. Very clear. If you know that. I mean, that's nothing. If we just say movable, immovable. Even today, lands are movable, right? Lands are movable or immovable. Land and building. Land and building is movable or immovable? Movable. People moved. Hey, don't laugh. There was a news. No, they just taken one building and they just store it in another place. Yeah. Okay, land. Okay, land is there only. Fine. So this classification does not appear in accounts actually. Movable and immovable. We have a classification of tangible and intangible, current and non-current. Okay, movable and immovable is their colloquial usage. Movable asset and immovable asset. Maybe for tax purpose, maybe for some other this kind of concept, we have the concept of movable and immovable. Suppose you're having properties, asset for tax purpose, donation, gift. In that category, this concept is very important. Movable and immovable. But in accounting, we don't anywhere record movable and immovable. We record current, non-current. Non-current is fixed. Okay, current, non-current. And then tangible and these four classifications we have. And current, I mean, yeah, only these four. In balance sheet, we have assets only these four types. Okay, asset is one of the component in the balance sheet. No, in that we have these two classifications, current and non-current. In current, I mean, in non-current, we have two, tangible and intangible. That's all. In current, we have some more classifications, individual classification, maybe debtors, cash in hand, receivables. Okay, and then some accruals. This kind of classification we have. We don't have this movable and immovable in balance sheet in accounting point. Okay, so entry for that is purchased goods for rupees. How much? 5 lakhs from Vijay Enterprises. Entry is. Wait, don't write it. Yeah, that's good. Once again, wait. Goods account debtor to cash also okay. But what is better way of doing it? Please understand. Goods account debit to cash following the real account rule. Goods is real. Follow real account. Debit what comes in? Goods coming in. Goods account debit. Debit credit the giver. Who is giving it? Vijay Enterprise giving to Vijay Enterprise. Okay. That logic is, sir, buying for what you are buying? For selling. So it's an expense. Nominal account rule says that debit all expenses. So purchase account debit. So which is better? It is decided by the accountant. Goods account also okay. Purchase account also okay. And one more way of doing it. That's better. Everybody is doing like that. What is that? The name of the goods, they will write it. Cotton account debit. Yarn account debit. Especially in manufacturing concern, they will do like that. Whenever they issue the raw material to the production purpose, they will again do one more entry. You write it in the name of the good itself. A account debit, meaning A is a good name, cotton, water bottle, okay, remote control, TV, like that they will write it. When they issue for sales, then they will credit it. A account debit, 1 lakh. Some other time, so many credits are there for A. Okay, 10, 20, 30. So 10, 20, 30 is equal to 60. Remaining, how much the balance will be there? 40,000 will be there in the account of A itself. You need not to prepare a separate account for stock. How much is in A? 40,000 is in A. So stock of A is 40,000. So in academics, we'll follow one uniform method. We follow purchase account debit. Okay, right. Purchase account debit to what? Vijay Enterprise account. Suppose the same goods are purchased for cash. Goods, I mean, purchase account debit to cash. If the same goods are purchased by giving a check, purchase account debit to bank account. Okay. Next, sold goods to Surya. Sold goods to Surya Enterprises. Sold goods to Surya Enterprises. Yeah. Sold goods to Surya Enterprises. Sorry. All are business people. Vijay Enterprises is a company. If you don't like them, don't deal with them. You can take your own customer, you can take your own supplier, it is left to you. There is no regulation in India telling you to deal with the customers, deal with the suppliers. It's your own choice. Some name, XY is boring. So some Ajit Vijay Surya. If you don't like Ajit Vijay Surya, you can take someone. Concept is important, not the names. Yeah, madam. One second. Yeah. Answer for that. Narration. Narration is being goods purchased from enterprises. Being goods purchased from enterprises. Okay. Sold goods to Yes and Co. Sold goods to Yes and Co. For rupees 3 lakhs. Sold goods to Yes and Company for rupees 3 lakhs. Okay. Vijay is not Tamil actor, man. So many Vijays are there. No, Telugu one Vijay is there. Vijay D something. Something is there. He is in some trouble now. Some weeks back. Some problem. Some issues. Okay. Come to accounts. Yeah. So next one is sold goods to Yes and Company rupees 3 lakhs. Sold goods to Yes and Company rupees 3 lakhs. First entry. Yes and Company account debit to Yes and Company account debit to sales account. Yes and Company account debit to sales account. Okay, same concept. If you collected money from Yes and Company, you need not remember Yes and Company. Suppose sold goods to Yes and Company by receiving money of rupees 3 lakhs. First entry. Yeah, I'll tell you. If you received 3 lakhs from Yes and Company by selling the goods, what's entry? Same entry cannot be passed. Cash to sales. If you did not receive money, that company to whom you sold account debit to sales. Clear? If you received goods immediately, received money immediately, then cash account debit to sales. Anyway, you have to credit sales. If you sold goods, you have to credit sales. There's no doubt. Sold goods. Okay. But how are you selling? For cash account debit. If you're receiving money in bank account debit. If you're receiving a check, bank account debit. Okay. If you don't receive anything, then you have to debit the person or the company to whom you sold. Clear? Being goods sold to 3 lakhs you have to mention. Which one? Narration. A narration you have to mention. But somebody, you are asking about this, somebody is not writing the narration also. Some people. Yeah. Yeah. Anything is fine. In narration, even if you want to write words, he's asking about words, you can write, no problem. Yes, one line. Or if you are not drawing one line, leave one line. That's easy. Okay, just to have a difference between the one and another. Okay. Next. Received a check for rupees 2,45,000 from whom? From North Indian actress. Vikram. From Vikram. Any name. From Vikram and Co. In full settlement of rupees 2,50,000. Received a check for rupees 2,45,000 from Vikram and Co. In full settlement of rupees 2,50,000. 2,50,000. 2,50,000. Meaning you already sold goods to Vikram and Co. sometimes back for rupees how much? 2,50,000. But now he's coming and giving a check only 2,45,000 and telling that hereafter don't ask me any money. You are also okay. At least you are given 2,45,000. Thank you. Like that you are telling settlement, full settlement. Now the difference is 5,000. That is called discount. Obviously that's called discount. Okay. So what's the entry now? Discount is what? Discount is a loss. So it's a nominal account. What rule is there? Nominal account? Debit all expense and losses. So discount is a loss. So you have to debit it. One thing. Wait. Another one. How much you received? Where you received? Through check. It will go to bank only. So your bank balance is going to increase. So bank account debit. That's a problem. The SMS problem. Okay, your account is credited. Meaning your account in the bank is credited. In your books, you have to debit your bank. That's the logic. So whenever you don't get confused, simple. Whenever you receive money, keep one simple rule. Whenever you receive money in your bank account, debit the bank for accounting purpose, for class. Whenever you receive money in the company's bank account, you debit bank account in your book. It's simple. Whenever money goes out from your bank, out from your company's bank account, credit the bank. Simple logic. Don't worry about anything else. Bank balance increases, debit bank account. Bank balance reduces, credit bank account. You are not crediting bank account, your bank account. You are crediting company's bank account. Please understand. Okay. Don't think too much. Follow this. Rule, logic, debit the receiver. Who is receiving? Bank is receiving. On behalf of the business, our bank is receiving money, right? And it is keeping the money in the bank on behalf of us. So it's our money. Okay. So debit the receiver. Personal account rule says debit the receiver. So bank account debit. Okay. Write it. Bank account debit. How much? How much you received? 2,45,000. 2,45,000. Don't go to 2 immediately. We have one more debit. No. Yeah. Discount allowed account debit. Bank account debit 2,45,000. Discount allowed account debit 5,000. How do I know this 5,000? Difference between the amount due, amount received. Discount allowed account or discount account simply 5,000. Debit will not. I'm telling discount allowed account debit. Discount allowed account debit 5,000. 2. Vikram and company account. Vikram and company, how much? In credit side, 2.5 lakhs. Being Vikram and company account settled. Being Vikram and company account settled. Being Vikram and company account settled. Okay. We have one buyer, supplier, right? Already we have one supplier. We bought goods from Vijay Enterprises. Am I right? Next question. Paid rupees 1,95,000. Paid rupees 1,95,000 to Yes and company. Yes is our customer, no? Okay, it's not in continuous transactions, independent transaction, can be anything. So paid rupees 1,95,000 to Yes and Co. Yes and Co. In full settlement of 2,05,000. In full settlement of 2,05,000. You tell me the entry. You are paying what? I'm not asking you are paying how much. You are paying what? Cash you are paying. Okay. Cash real account. Right? Real account. To whom you are paying? Yes and Co. He is a person or company. So personal account. Okay. Full settlement. That's okay. Loss is there. No, loss is not there. Gain is there. Instead of giving 2,05,000, we are giving 95,000. So the gain is 10,000. Gain is also again nominal account. So nominal account says credit the income and gain. Real account rule says credit what goes out. Personal account rule says debit the receiver. Who is receiver? SN company. Write it. SN company account debit. Yes, and company account debit. How much you are settling? 2,10,000. How much you are settling? 2,05,000. So SN company account debit 2,05,000. 2,05,000. See, this amount should be just amount only. The particulars text what you are writing should be only within the particulars column. Okay. Yeah. So SN company account debit 2,05,000. To cash account. How much? 1,95,000. To cash account 1,95,000. Again, one more 2. What is that? To discount received account. To discount received account. Credit side. These two are credit side, no? This is credit side. 1,95,000 is credit side. We written 2, no? 1,95,000 and then 10,000 being yes and co account settled in full. Settled in full. Like this, there are numerous number of transactions. We don't want to write another 2-3 minutes. I mean, we have another 15 minutes, right? Just orally we take some transactions and we try to answer that. Okay. Yes, sir. Settled. Yeah. Being yes company account settled in full. Okay. Now you tell me some transactions. Is there anybody online to tell some transactions? 1 or 2 we can take from you. Online people, online executives, online students. Anybody? Just tell me one transaction and we'll try to find out the journal for that transaction. Online. How many of you are online? I'm sorry, I did not see any chat messages in the chat box. If anybody has put in.
Yes, sir.
Yeah.
Yes, sir.
There are so many messages.
Hello.
Sorry, I did not see any question was there.
Translate what, sir?
Jasbir was telling cash deposited to bank. Some example for some transaction before. Yeah, good. Anybody now? Any transaction? Apart from what you have taken, we can take one transaction and we can try for journal entry. Yes, madam. Somebody was talking, right? Yes. Anybody from online? Somebody was trying to talk. We are ready to listen to you now. Yes.
Any entry, any transaction entry you want?
Yes,
You
any
may-
transaction.
Okay.
So many we have taken so far now. Surya, Vijay, Ajit, so many. Anything
Oh.
else? Purchase, sales. Yeah.
Payment of
Payment of,
payment to
madam.
payment for purchase of furniture comes in.
Yes,
the
madam.
furniture
Payment of?
account debtor to cash.
Sorry, we are not able to hear you properly. Once again, finally tell me.
Purchase of furniture.
Yeah. Purchase of furniture
Furniture worth some 5 lakhs.
worth 5 lakhs. Okay. What's the entry now? Since it is furniture, we can take just furniture.
Furniture account.
Debit,
Yeah.
cash account
Okay,
or bank account, depending upon the
Furniture
case.
account debit to cash account.
Very good.
Yes.
Okay. Anybody from here, sir? You tell me one transaction. Don't ask me. You tell me a transaction. That's all. Goods sold for 5 lakh rupees. Already we sold, no? What's the entry? What's the entry? Cash to sales. Good. Sir. He sold it. You can buy now. Yeah, he does not want to buy. Yes, something else. Yes. Sir, you will come. You will get it, sir. Keep your pin with you. You will get it. Yeah. If you supply to him, then you will have a problem. Yeah, sir. Quickly. You are buying. You can't make a discount. The seller only can make a discount. Okay, you are buying with the discount. What you are buying? Goods. Only two things are there. Either it can be goods or it can be any particular asset. Okay. What you are buying? You already purchased furniture, somebody online. You? What is it? You are buying a car. Balloon car. You are buying. Discount is given. Okay. Original price was 11 lakh. You are buying it for 10 lakh 50,000. Purchasing a car for the company use. What's the entry for that, sir? Have you paid money? No. Yes or no? Yet to be paid. Yeah. No, yet to be paid. From X car distributing company, he's bought one car for rupees 10 lakh 50,000. Original price of the car is 11 lakh. He got discount of 50,000. Money has not paid. He has to pay later, tomorrow or day after tomorrow. What's the entry? When you buy, only two options. Either you have to debit goods or you can purchase. Purchase account debit or goods account debit. Otherwise, the name of that particular item to be debited. Yeah. Now, simple now. I told the answer. So answer is car account debit. Or you can have some heads of the account in your company to include all these automobiles. Okay, that account can be debited. Or simply car account debit. Car within bracket, Baleno, number and everything. Account debited. To correct, exactly. Good. That's understandable. Now money is not paid, no? So it is distributor account credit. Yeah. Money, how much you will debit and credit? Okay. All those things keep in mind. Now tell me, you told two things. Car account debit, how much? Distributor account credit, how much? Okay. Debit? But it's not matching. No, we already told no. Each and fill the entry completely now. Okay. Full entry, tell me. Okay. With amount, car account debit 10 lakh 50,000. Debit or credit? Debit 50,000. Two, and is not there in journal entry. To distributor account 11 lakh. Is it right? No, it's completely wrong. Okay, sir. You told somebody told wrong, no? You told wrong. Yes, why? Cost concept. We just discussed no cost concept, historical cost concept. How much the cost of car for you? How much it cost for you? 10 lakh 50. That's all. Invoice is raised for how much? 10 lakh 50 only. You will write car account debit 10 lakh 50,000 to distributor account 10 lakh 50,000. That's all. This is called trade discount. Why are you getting this? Your friend may be working there, or you just bought one more car last month. You're buying second car, or they appreciate some effort of yours. No. The discount is wrong. Yeah. Yeah. Let him complete. Yeah. I'm not getting you what it is. In your books, suppose your company buys a car means. In distributor books, what you will write? Your name, account debit to car sales account. To sales account, 10 lakh 50. That's it. How it is taken care, that 50,000? It is automatically reduced in the profit. How do you calculate profit? Income minus expenditure. One of the major income of the company is sales. In sales itself, instead of writing 11, we are writing 1050. So it's in that way, it is automatically taken care. Okay. This is called a trade discount. Trade discount will not be explicitly written in the books of accounts. It is written in the lesser amount. 11 lakh is the list price. 10 lakh 50,000 is the invoice price. Okay, we'll write only invoice price in the accounts, not the list price. Okay. Yeah. Yes, sir. One more. 1 second. Oh, sir, 1 second. Yeah. Yes.
Even got Royal Enfield for 1 lakh and paid the remaining amount, settled in 50,000 in EMI.
All of you, please listen. Once again, sir. Clarity.
Even bought Royal Enfield for 1 lakh.
Okay.
Settle the remaining amount of 50,000 in EMI.
What is the value of the Enfield?
1 lakh.
Okay. Okay. 50. Invoiced for 1 lakh 50, paid immediately 1 lakh 50 is going to be paid in EMI. What's the journal entry today? At the time of buying in the books of Arvind. Royal Enfield account debit, how much? 1 lakh 50. To cash, 1 lakh. To the distributor name, 50,000. Simple. Okay. Whenever he is going to pay EMI, that is botheration of that day. We don't worry about now. One more transaction. Just think from the business perspective. Okay, first is two entry, two transaction. Graduation, then post graduation. First, we talk about graduation. You are taking a loan from whom? How much? Okay. What's the entry for this? Bank account debit to bank's loan account. Bank account debit to bank's loan account. Your bank balance increases, one more new account is created. That's a loan account. How much? 1 lakh. Over. Being bank loan raised, 1 lakh. Over. Next, what are you doing? Buying some goods with that amount, 1 lakh. Which goods you are buying? Goods are set. Goods. So purchase account debit to bank account. Purchase account debit to loan or nothing is coming here. You raised a loan, that's separate one. With the money, what are you going to do? That's your choice. You are buying something, purchase account debit to bank account. That's all. Two different, see, in accounting, you have to take particular transaction, then the next one, then clarity will be there. Don't bring 2, 3 chain together. If it is there, just cut it. One by one, you see, you can clarify and you can write it. Yes, madam. One more transaction. Just 2 more minutes. Yeah, to purchase, you have to sell now. Yeah. Okay. So it is not a different transaction, whatever we already know. Same thing. Two transactions. One is purchase to cash, cash to sales. First one amount is 2 lakhs, second one amount is 2,50,000. That's all. Purchase to cash, 2 lakhs. Cash to sales, 2,50,000. Matter over. Being goods sold. Yes, madam. Any different transaction? What we have not discussed. We bought from Vijay, we sold to Surya, but we did not have any defective goods. You are telling defective goods are returned to the supplier. Am I right? Possible, no? Defective goods returned back to the supplier. What's the entry? What's the entry? Goods are going out to your supplier. Why sales return? You bought from your supplier, you are returning back to your supplier. Who is receiving it? Supplier is receiving. Supplier account debit. When you buy from him, you created this account. You remember? Now you debit. Okay, you write one note, debit note. One second. Supplier account debit to purchase return account. Supplier account debit to purchase return account. That's the entry. You are telling something? Cash or something? No supplier will give you cash. When it is possible, you bought it on credit. You are having upper hand now. He has to come and ask me, sir, when are you going to give me money? Take this first 10,000 rupees worth of goods, which is not proper. Take it back and go. We will give you money later. He is having no option. You have to take the goods and go. Remaining 90,000 you have to settle. If originally 1 lakh was a purchase amount, remaining will settle for 90,000. That time we'll give 90,000 cash or bank. Okay. We cannot ask him, give me my money back, 10,000, because you did not pay the money. Suppose you bought it for cash, can you return it? Never. If you return it. He's going to sell it for another customer the same goods. You already paid for the entire goods. That's a custom of the business. Sometime out of rapport, he does not want to lose the customer. He may take back, but he won't give the cash. What he will do? Buy another, take another goods, replacement. That's possible. Okay. Final one more. Cash, if it is a cash transaction, hot cash transaction, which one? Allowed up to 25,000 or 5,000. No, not company policy. It's depending upon the government policy. If you have anything in cash, then there is no need of GST. There is no need of anything. No, like why this control has come? These business people, no, we want to promote business. Government wants to promote business, but business people, they are not that much transparent and honest to the government of India in terms of taxes. Okay, I hail from a place where a lot of trade happens, small, very small level, but the volume of transaction is huge. Small level, if you add it, it is bigger amount. It will be crores and crores. In India, there are so many places like that. Trade centers are there. Okay, they deal in cash. They don't bring that into account. In second account, it will be there. Okay, so government does not able to capture that. For that purpose, only now government is encouraging you to do business only in cash. I think it is more than 25,000 rupees. You have to do only in check payment or through account. 48,000 something. I'm not sure, but there is a limit. Beyond that amount, if you are having any transaction, you have to settle through only through bank, through account, not through hard cash. Okay, even for selling of any capital goods, land, everything is there. We'll discuss about that. It's not accounting, but accountant has only one thing: what you paid. You follow government rule. That's your choice. That's a management choice. What it done, you tell me. I just record it. If you received 20 lakhs cash, I will record it. That's all. Okay. So this is about the journal entries. I have done some possibilities. There are so many transactions are there in this text, what I have shown you. Please take some 4 questions at least from this document. We confined only with this document. I have shared a lot of things with you in the LMS. This year, I decided to confine with only those documents. Okay, any questions or any kind of discussion, everything only from that document. So please take any 4 questions, illustrated questions. Look for the transaction like this, whatever we have done so far, and look for the answer in the same thing. Try to understand. If there is any problem, you just bring that into next class and we will discuss. Okay, assignment I'll update today evening or tomorrow evening. Okay, it will be based on the journal, ledger, or the basic concept what we discussed. Okay, I will give you sufficient time. If possible, next class we can discuss the assignment in the class for 5-10 minutes. Then you can write it. Okay, if you know that, you can start writing it right now. No problem. Okay, thank you so much. See you in the next class. If any problem or any doubt or any issues are there, you can just contact me. Thank you so much. Those who are online, those who are online, any doubt or anything need to be clarified. If not, we are winding up. We are closing it.
Thank you, sir.
Any doubt from online people? Okay, if no,
No,
we are
sir.
winding up. Thank you
Yes.
so much. See you in the next class.
Okay.